Hello, and welcome to Chapter 2, the second video of 2. We're going to be looking, this will be the last video for Chapter 2, and then we'll be moving into Chapter 3, which is job costing. So let's go ahead and get into it. We're just covering one learning objective today, and it's 2.5. It's preparing the income statement. So this is a little bit more calculation heavy, so we're going to just work on this particular thing today and make sure we get through it okay. So the main thing, as we mentioned in the beginning of the lecture series, is that this first third of the section of the textbook is going to be work on cost of goods sold for a manufacturing environment, which is different from a merchandising environment in that it has more types of inventory. We have work in process inventory, we have raw materials inventory, and we have finished goods inventory. So the key to understanding this particular, learning objective and preparing the income statement with the additional inventory levels is that we have to actually kind of back figure what the cost of goods sold by going through the different types of inventory to see how much of those inventories we've used up or have actually been utilized in the goods that have been sold. And I find that the easiest way to approach this series of calculations is by looking at what we call the basic inventory equation. So here we will have just the inventory equation, and we'll end up using this in a bunch of different roles. And the basics is that you start off with beginning inventory, you add purchases, and that will equal ending inventory and cost of goods sold. Well, it's not a calculation in the true sense of that, there is, it's more of a truism, I guess I would say, that beginning inventory plus purchases have to equal cost of goods sold and ending inventory. So let's take an easy situation and think about this. Let's say you're a Ferrari dealer and you have a small amount of Ferraris on your lot. You go out at the beginning of the month and you count your number of Ferraris and you say, oh, I've got 4. And you say, well, during the month, I know I purchased 3 extra ones. And then you go at the end of the month and you go out on the lot and you count, well, look, I have 5 Ferraris left. Well, how many did you sell? In other words, this is the unknown. Well, if you know you began with 4, you purchased 3, and you're left with 5, well, that means you must have sold 2. So it just ends up that most of the time we're trying to figure out this one. We're trying to figure out the cost of goods sold. So we will reconfigure this to say beginning inventory plus purchases minus ending inventory will be our cost of goods sold. And we shouldn't be too focused on these words, purchasing and COGS. We should think of this more as, well, beginning inventory and ending inventory. That's relatively straightforward. But this should be stuff that is incoming into a process. And this will be things that are outgoing from the process. Well, we said cost of goods sold. Things that are sold are things that are leaving the inventory. Purchases are things that are coming into the inventory. So when we look at the various, when we look at the various types of, we're trying to work towards building up the income statement. First, we need to know what the cost of goods sold is. But in order to know that, we need to know what was the finished goods inventory. How many things went in and out of the finished goods inventory? So when we talk about that, we will then know, well, in order to know what happened in the finished goods inventory, we will need to know what happens with the cost of goods manufactured. That means we had a bunch of stuff we were working on, and how much of it did we actually make versus how much of it is still work in process. So you'll notice that these correspond to the 3 types of inventory. We're working through the 3 different types of inventory. So this first one, this cost of goods sold is actually figuring out the finished goods inventory. The cost of goods manufacturing is figuring out the work in process inventory. And the direct material used is figuring out the raw materials. And so we use slightly different words. We use cost of goods sold, cost of goods manufactured, and direct materials used. But each of these is this item. It is what left the inventory? What left the finished goods inventory? What left the work in process inventory? What left the raw materials inventory? So even though we use a bunch of different words, it's still going to be this basic statement. Beginning inventory plus whatever comes in minus what's left equals, well, what's left, what the result is what left the inventory. So to work up to the income statement, we have to start off with direct materials. To figure that number, we plug that number into cost of goods manufactured. We then plug that number into cost of goods sold, and then we can do the income statement. So each of these steps is using this same inventory equation. So let's take an example here. We've got direct materials used, and you'll be given something like this. Sometimes it'll be a bunch of sentences, or sometimes it'll be a chart like this, but you'll be given essentially the same amount of information. So let's take a look and work through it. Remember, we're still just focused on beginning inventory plus incoming items minus ending inventory equals whatever we're looking for, the outgoing items. And in this case, the outgoing items is what are the direct materials used. So we start off with beginning raw materials inventory, and we can see that right here, right? So we would say 21,000. And we would say, okay, so if we put the letters here, this is the beginning inventory. This is the purchases, right? Or this is the incoming. This is, so plus purchases minus ending inventory equals our cost of goods sold, our direct materials used, or the outgoing item. So you can see this setup here is just following the inventory equation. So direct material purchases, purchase of direct materials, 70,000. Now, when we could just do add purchases minus ending inventory and get the number. For the accounting students, we actually have a number of intermediate terms. We are not really going to focus on those in this course, but just FYI, it's just the adding and subtracting. So these two added up equals the materials available use, and then we subtract out the raw materials inventory, the ending raw materials inventory. So minus 26,000. And that's going to give us 65,000. We started off with 21,000 in inventory. We added 70. We went out. This is like, we started off with 4 Ferraris. We purchased 3. We went out and counted 5. That means we had to have sold 2. So this is the amount that left. So that would be the first step. Figure out the direct materials used based upon this inventory equation. Well, 65,000. Well, we'll bring that number into the next step here, the cost of goods manufactured. And as you can see, I've just brought it down here. We've already figured this out. It's not on the list. We figured it out in the prior step. And similarly, we have beginning inventory. Now, here, the incoming items, you have to remember, we're working in a manufacturing environment are 3 things. They're the direct materials, the direct labor, and the manufacturing overhead. Now, just be aware that really the direct materials is the only one that that is a physical inventory. In other words, we don't have labor sitting on the shelf and have to count labor at the beginning or the end of the term. We know what the number is from our time cards and that sort of thing. So we would then subtract out the ending inventory of work in process, and this is going to give us what we call our cost of goods manufactured. But remember, this is just all we're trying to figure out is these are the things that left work in process inventory. They were finished. They became finished goods. So we will take these items and add them into the finished goods because they're no longer in work in process. These are the items that were completed during this period. So we start off with the beginning work in process inventory, and that's going to be 35,000. We just figured out our direct materials, right? Right up here, 65,000. That was the amount that left the raw materials that entered into the work in process the work in process inventory. Direct labor, we are just told that number. Here's the direct labor. The manufacturing overhead is, well, we're going to have to figure that out. So remember, when we talk about manufacturing overhead, we have product cost and period cost. And remember, the difference is product costs are ones that deal with the factory environment, and period costs are the ones that don't have anything to do with the factory. Of the product costs are divided into two. They're either direct, and they'll be direct materials or direct labor, or they'll be indirect. So what we need to do is we need to find out what factory stuff, what indirect factory stuff do we have? Well, we've got indirect labor, we've got insurance on the plant, we've got depreciation, and we got repairs and plant maintenance. Marketing expenses does not have anything to do with the factory environment. General and administrative expenses does not have anything to do with the factory environment. So we add those things together, and we get 20, 60, well, let's see, 27, 24, 7, 66, 7. And we will then take and add these items together. And just like I said in the prior one, adding the beginning inventory plus the purchases or the incoming items has a special name. Here it's total manufacturing cost to account for. And this total is going to be 182, 40, 700. Then, just like we did before, remember this is beginning inventory plus the incoming items minus the ending inventory equals the outgoing item. So here we want to have less ending work in process inventory, which is 29,000. Sorry, I'm still getting used to the sensitivity of this pen. And this will be, and I'm actually going to look at the calculation here, 217,700. So what does that mean? Well, we had a bunch of stuff in work in process. This is how much we completed during the period. We completed this amount of goods. These are the items that actually entered into the finished goods inventory. So if that was step 2, the cost of goods manufactured, we're going to move down to the step 3, the cost of goods sold. And just like we figured in the last section, we're going to carry over our result to 217,700. And just the same again, we're going to have beginning inventory. We're going to use the same thing, plus the incoming items minus the ending inventory equals whatever the outgoing items here. So beginning finished goods inventory, well, we have 16,000, right? Plus cost of goods manufactured, which we figured in the last part. And that's going to give us 233,700. So this is the beginning inventory plus incoming items minus the ending inventory equals the outgoing items. And here the outgoing item is cost of goods sold. So less the ending finished goods inventory, another 29,000. A little unfortunate that's the same number for both of those. And we have 204,700. Well, why did we do all this work? Well, GAAP requires us that when we create an income statement, we need to say what is the cost of goods sold. So remember, for the merchandising, all we needed to do was the LIFO and FIFO calculations, last in, first out, whatever that is. Because we have 3 types of inventory in the manufacturing environment, we kind of have to figure out each one and build up to the cost of goods sold. So this is the item, 204,700, that is going to go on our income statement. And here's our income statement information. Now, it doesn't list it here in this chart, but typically there will be some text, or there may be a line item that will tell you the revenue. You have to have some sort of revenue number to make an income statement. So you would have the normal header, the income statement, and it would be for the company name. So it would be company name also, and it would be for the time period, for the year ending, etc., etc. So you'd start off with, and you've all built these income statements before in the financial statement and the financial intro to financial course. So you would say 320,000 less cost of goods sold. And while those other terms I'm not so concerned of, this is one term that you probably should already know and you should just keep being aware of: gross profit. So gross profit typically is not our final income. Our gross profit is what is our sales revenue minus our major expense. And our major expense typically is the cost of the item that we're selling. So this is our main operating item. So this would be 115,300. And then we would take out all of these. Remember that we haven't done anything with these period costs, because they don't go into the cost of goods sold or the manufacturing information. These period costs we would come up here and be able to find. We didn't use them in the manufacturing environment, but we still use them on the final income statement. So here we would have the 77,000 and the 23,500. And then our operating income would be 14,800. Okay, so just as a quick review, when we're doing the income statement, we're going to be focusing on the three different types of inventory. We're going to be using this inventory equation in multiple different ways. The beginning inventory plus purchases, or beginning inventory plus incoming, equals COGS, or the outgoing plus ending inventory. We rework it to where we're calculating for something. And then we would progressively go through. We work through figuring out the direct materials first. That gives us how much raw material was used. We plug that into the work in process inventory calculations to figure out how many items were actually finished. We take the finished items and then we add that into our finished goods inventory to figure out how many of the finished items were sold. And then the sold items are the ones that we actually put on the income statement. Okay, so that is everything we need to know for Chapter 2. And as I have here on the left, you'll have a number of opportunities, 6 questions that deal with some part. Not each one of these questions deals with every part of this, but this is the complete process. If you have any questions, please email me or come by the office hours as posted on Blackboard. Thank you very much.